Hey, Joel, we got John on the line. What do you want to ask him?
In your area, you were talking about the Midwest. How do you narrow down
Mhm.
specifically what you're looking for in a market?
I'll tell you this, right? Look at population, job growth, look at industry diversification, look at the ease of doing business, things like that. And those are very critical things, okay? Very, very important. You want to be in markets that are growing. You want to be in areas where demand for multifamily or whatever your business is, where that demand is growing and likely to continue to grow.
Hey, I'm Brian Briscoe, host of the Diary of an Apartment Investor podcast. And this podcast is different from everything else out there. I bring together new and inspiring investors on each and every episode and let the aspiring investors ask the questions that they need answered. And if you're an aspiring investor yourself, you probably have the same questions. So before you get to this episode that we have prepared for you, make sure you hit the subscribe button and that little notification bell to make sure you get notified every time we post a new episode. And now, enjoy the show.
Welcome to the Diary of an Apartment Investor podcast. I'm your host, Brian Briscoe. I'm very excited for today's show. We got two amazing guys on the line with us today. We got the one and only John Casmon, and we got Joel Beauchene with us today. So, guys, welcome to the show.
Thanks for having us.
Absolutely. Thank you for having me being here today.
Yeah, and so we got John Casmon back. I think he was probably the guest around episode 15, one of the first ones we had. And, John, good to have you back on the show.
Yeah, absolutely. Listen, Brian, it's a pleasure seeing you again. We just saw each other a week ago, not even that long ago, a week ago.
Yeah.
So it's good seeing you there. And I always enjoy talking to you. And it's great to be here and share this conversation with the wider audience today.
Always good seeing you too, my friend. And gonna have a lot of fun here today. So let's talk about you first of all. Tell us all about where you're from, how you got into multifamily, and where you're at right now.
Yeah, so if you didn't check out episode 15, you should put that on your list to check out. But
Absolutely.
in the short, my name's John Casmon. I'm based in Cincinnati, Ohio, but I am a Midwest kid, right? I was born and raised in Cleveland. I've went to school in Dayton. I've lived in Detroit. I've lived in Chicago, and now I'm here in Cincinnati. I was in corporate America. I did that for 15 years, working marketing and advertising. And slowly over time, I started to realize that I had to take more control over my financial future. That really started with, 2007, 2008. I was at General Motors when we went bankrupt. So I was there at headquarters and I lived that every day. And that really just kind of helped me understand that I couldn't rely on a W-2. So started learning more about real estate. Over time, I started to invest in real estate, building up my own personal portfolio, eventually investing with other people. And today we've invested in over $125 million worth of apartments and continue to grow that with our Casmon Capital Group company.
Nice. So, I mean, that's something that I think a lot of people, you mentioned, you realized that you had to take your financial future into your own hands. And I think that's when a light bulb goes on for a lot of people. And personally, I wish it would have happened with me a lot earlier than it did. Let's talk about that transition from corporate to multifamily, kind of what that looked like for you and what some of the challenges were along the way.
Well, I think one challenge that's a real challenge for anybody in corporate America is just kind of the mindset, right? I mean, it's one thing to say, hey, you know what, I want to have my own business or I want to go do this. And maybe you have the technical knowledge or the expertise to do that, whether it's real estate or anything, right? You may have the technical knowledge to do that, but being an entrepreneur, it's different than being an employee. And there are little nuances in how you think that you're going to have to adjust. So for me, one of it was, you just got to figure it out. And it's this mentality of just running through a brick wall. When you're in corporate America, you're taking in feedback. You've got resources, you've got data, you have counterparts. You're understanding what your bosses are looking for. You're understanding if I do this and fail, what's the ramifications? If I do this and succeed, what's the benefit? So you're doing all this analysis of information before you kind of make a decision, right? And as an entrepreneur, one, you don't have access to as many resources. You don't have access to as much data. You don't have as many resources around you to bounce ideas off of. You don't have maybe bosses and senior leadership or board members to give you advice, and you don't have the time. So a lot of times you got an idea, go execute and then get feedback. And in corporate America, that's not really how it works, right? So in corporate, it's ready, aim. Let's go back. Ready, aim, fire, right? Eventually. And as an entrepreneur, it's usually ready, fire, aim. So you're going out there, you have an idea, you throw it out, and then you figure out, oh, you know what, I probably should have did this, and this. And I think that mindset, especially if you're risk averse, if your risk aversion is high, it's really difficult. And what happens is over time, you just realize that actually not taking action is the worst thing you can do.
Yeah.
And that's really difficult for people to just rewire their minds like that, to realize, you know what, we just got to go. And we were talking about the podcast. That's one great example, right? You can have the idea to do a podcast. Many people have an idea to do a podcast. How many people actually execute on that idea?
Yeah.
How many people take the time and they try to do all the research on, okay, what makes a good podcast? And, you may spend months and months exploring how to create a podcast, but never actually do it. Or by the time you do it, it's a year later, 2 years later, when you could have just launched it and made tweaks along the way. And I'm not saying there's anything wrong with getting intelligence and obviously getting the information so you can launch in a very effective manner. But launching, having something done is better than having it, be in a draft phase in your head. So I think that mindset is the biggest challenge for many people, is recognizing that it doesn't have to be perfect, but you just got to go, you got to start, and then make adjustments along the way.
Yeah. I heard somebody else throw out a quote, and I have no idea who originally said this: done is better than perfect.
Yep.
And I, for one, was a guy that was ready, aim, fire. And one day I had the realization that I'm not going to learn anything else from podcasts. I'm not going to learn anything else from books. I'm at the point right now where the only next step for me is action. And ever since then, I've tried to be the ready, fire, aim, but I think there's still too much aiming in the way. But well, cool. So appreciate the words of advice, the going from W-2 to entrepreneur. Incidentally, I just hired a business coach to help me build some more entrepreneurship, and get that stuff going on. So I'm excited for that.
Yeah. And Brian, I imagine for you too, right? Coming from the military, where you're used to having order and kind of a chain of command and having structure, right? Like it's kind of tough when you don't have that. And it's like, okay, yes, I know I can just go out there and do it. But the way your mind is trained is, hey, there's certain protocols we got to follow. There's certain information and inputs we got to get. So it's tough to break that. And those things they can be really good and helpful, but sometimes as an entrepreneur, you just simply won't have that information. And you just need to run, and having, folks who can help you retrain is obviously going to be very helpful for you.
Yeah. In the military, we try to have as much information as possible. But one thing that I realized, and it took me a while to apply this to business, is, a lot of times when we're planning, there's this big gray nebulous thing called the enemy, and we never know exactly what they're doing, what they're thinking, and where they are. And, we're very comfortable operating, not knowing, the full picture. And I had to start applying that to business and say, okay, I don't know what's going to happen here, but, I can be comfortable, doing that. I can be comfortable knowing 60% or 70% of what's going on. It's the same with properties. I mean, you're never going to have 100% picture on the property, even after you own a place for 15 years. You're never going to have 100% clear picture, but you can get comfortable enough. You can know enough to make decisions. So that was a big thing for me to learn up front. But so Midwest guy, you say, let's talk about your portfolio. And I know you got a lot of Midwest properties. Tell me what you like about the Midwest, and then talk about some of the properties you've done. Or
well, listen, I'm obviously
I'm
obviously a little bit biased, right? I mean, I live in the Midwest kid here, but I do like the Midwest. And the reason I like the Midwest is, first of all, there's good cash flow to be had, and there's a little bit of a bias that the Midwest is only good for cash flow, but that's not true. There's great appreciating markets here. We have population growth. We have everything you could want. And we have some major metropolitans, right? So Chicago, Indianapolis, Louisville, Cincinnati, Columbus. There's some pretty big cities here that have some nightlife and great museums, Minneapolis, all these kind of things, right? Yeah. For us, when we talk about investing in the Midwest, we like to invest in growing parts of the Midwest. So I'm not talking about the Rust Belt. I'm from Cleveland. I lived in Detroit. Those are great cities. But when it comes to investing, we like the same kind of fundamentals that most multifamily investors like. Yeah. We want to see population growth. We want to see job growth. We want to see industry diversification. I want to see landlord and business friendliness. So those are the things that we are looking for at all the markets we're investing in. So those markets are going to be, your Louisville, Kentucky's, your Indianapolis, Columbus, Cincinnati, Lexington. Those are kind of the markets we're playing in. And then we do invest in the Southeast region as well, certain markets in the Southeast as well. So for us, we like those markets. We've invested in, almost a dozen apartment deals, both in the Midwest and the Southeast region. And we continue to grow our portfolio in that area today.
Yeah, nice. I've heard a lot of things recently about Columbus, especially, as one of those Midwest markets. But I think Columbus and Indianapolis are the ones that I keep on hearing over and over again from people. So there is a lot of goodness and a lot of good opportunities in the Midwest. But yeah, it's just like anything else. You just gotta dig a little bit and find the right spots for it.
Let me give a little bit more context too, Brian. So the thing that, when you're looking at investing, obviously there are great markets all over the country. The thing that makes the Midwest a little bit unique is the kind of jobs that are there, and not just the jobs, but also just the physical geographic location, right? So it's fairly central to the entire country. That's great for transportation.
It is.
That's great for logistics. It's the heartland of America, and it's blue collar jobs. And these jobs and these industries are recession resistant. And that's the thing we like. I'm not knocking, anything on the West Coast, but we know the tech industry is a big driver for some of those West Coast markets. So right now, as the current economy, we're seeing a big impact on those tech industries. And that's something that, again, some of those tech jobs, you can pick up and move them anywhere in the country. These logistic jobs, these logistic businesses, UPS being headquartered in Louisville, here in Cincinnati, Amazon just built a $1.5 billion air cargo hub, the first of its kind in the country. Well, they're doing that because they want to be able to get to most places in the country and do same day delivery. So those are the things that we like. And because these are those blue collar kind of jobs that, you want to have affordability, you want to have the logistics, you still have healthcare, you still have education and higher learning. There's a lot of different industries there, and we like that blend. And the bottom line is this. The Midwest doesn't get as high up when times are great. So we're not going to be like a Phoenix necessarily, right? But we also don't go as low when times get hard. So if you're looking for more stability in a market, especially in an economy where everything is going to ebb and flow, the Midwest kind of provides that stability. So not as high when things go great, but also not as low when things go sour.
Yeah. And I mean, some people are looking for that stability in investments. Some people like a little more risk and, the hope of a larger reward, which you might get in a Phoenix. But, a lot of properties in Phoenix are trading at lower than they were a year ago. You could say the same things for a lot of the Southeast too. So, I think there's a lot of goodness with that. And there's a lot of good reasons to invest in the Midwest, especially now, I think. Well, cool. Let's shift gears a little bit and talk about, some motivational things. What's your big burning why?
Yeah, man, we were talking before we hit record about, kind of the kids and family and all that. And, I mentioned being in Detroit, working at General Motors when we went through bankruptcy. And during that time, I got to learn a lot about me and life and people and think about what success was, right? And to give you context, I had a really cool job. I was in advertising, right? And at the time I was working on the Pontiac brand, and I was, overseeing our NCAA relationship. I was, doing our deal with 50 Cent. I was going to Maximum Hot 100 parties. I was, hanging out with celebrities and promoting our vehicles and going to Jimmy Kimmel Live.
Yeah.
Really fun. I mean, listen, as far as a corporate job, I had one of the most fun jobs you could have. There's one guy who actually worked at GM who had the best job in the entire company. He ran Buick Golf. And this guy got to literally just go on, play golf all day with Tiger. So that was his job, right? So everyone in the company's like, oh, the rest of the engineers are sitting there calculating, drag coefficients and all this stuff. And this dude's out here playing golf with Tiger, right? So it wasn't really the same. But I say that to say it's really easy to get caught up in that. And to think that, I got a cool job. I'm gonna work this job forever. And when we went through bankruptcy and we had to exit a lot of those relationships, it allowed me to kind of step back and look at everybody and look at the company and look at my senior leaders and ask myself an honest question. Whose life do you want? As you look at them, it's one thing to want a job title, right? Most of us get into corporate, say, I want to get to this level. I want that job. I want this title. But I started to look at them and look at the stress on their face and look at their demeanor and ask myself, does that person look happy? And I would talk to them more. And one person told me they wake up at 4 a.m. and they would get in a workout. And then they read the reports and they would get to work by 6:30. And I'm like, they were out of the house before the kids even woke up. I knew one person who couldn't even remember their kid's name, like they had a nanny who didn't know their kid's birthday. Like it was like literally just completely detached and moving all over the country, and not just the country, over the world. There's one person who moved from California to Detroit, and then went from Detroit to Shanghai, all within a 2.5-year span. So I just started to step back and say, is that the life you want?
Yeah.
Like how much money does someone need to pay you for you to say, yeah, I'm good with that, right? That's what I want. I think as we went through bankruptcy and I saw that even for the people who signed up for that, you signed up with the expectation that there was job security and stability and kind of this parachute, right? And when even that was put into question, I think it made us all kind of take a look and say, you know what, I need to take more control here. Yeah. And as I, started my family, got married and had my kids, it made me think about the kind of dad I wanted to be, the kind of father I wanted to be, the kind of legacy I wanted to create and kind of and leave for my family, right? Yeah. And that's really what drives me, is thinking about that, understanding those challenges, and really the journey along the way. It hasn't been smooth. We've certainly, had our challenges, and whether it be investing, whether it be with bad contractors, but I've had to learn and internalize that. Could I have done differently? How can I learn and grow from this experience? How can I continue to evolve as an investor to drive a thriving business? And the thing that's really cool in that sense is when you work for a huge corporation that very publicly failed, then you realize that it's not necessarily about intelligence and degrees and all of that, right? It comes down to getting the right people in the room, listening to those people, and figuring out how to create opportunities. But the moment you get stagnant and you're kind of set in your ways, that's when you can set yourself up for failure, because you're not really listening to either your customers, the market, feedback. You're just doing things your way because maybe you're scared, and this is the easiest way to do it. So I think I took a lot of lessons working at a company like that have empowered me to make better decisions with my own business without some of that red tape. But just, that fear of waking up one day and realizing that I lived a life that I didn't plan on leading, and I don't really have much to show for it. That would be my biggest fear and kind of the driver for me.
Yeah. And it's amazing as you were speaking, how many things were, I mean, from corporate to military, how many things were very similar. There's one day that I had an epiphany, and I'd never really thought about, how long my career would be. I'd always just kind of just moved and kept on going. But one day I had the epiphany where I was, probably major, lieutenant colonel for people who understand the ranks at the time, and starting to look at the jobs of the people ahead of me and, higher ranking than me. And there was one day where I could legitimately say, I don't want any of those jobs. I don't want, any of that. I don't want that lifestyle. The same thing you were mentioning, most colonels at the Pentagon, show up at 6:30 in the morning and they leave at 6:30 at night. And they've got an hour commute on each end, but I had kind of the same realization that, where the way I was going wasn't going to work for me long term. But appreciate you sharing all that. A lot of words of wisdom in there too. So, well, last question for you, and then we'll bring Joel on. But what's next?
Yeah, we are really big in continuing to work with other investors, and that kind of manifests itself in many ways. We've got our podcast, obviously, Multifamily Insights. We have a conference coming up here, May 6th and 7th in Chicago. So we're really excited for that. That's the Midwest Real Estate Networking Summit. And we're doing some other things. So I'm getting ready to put on kind of a workshop on raising capital and doing some other things there. But the summit's the biggest thing for us. We've got that thing coming up. We have a lot of great speakers, including Jay Papasan, the co-author of The One Thing. And we're excited just to bring 250, 350 people to this event. And it's going to be a great experience. So we're excited to bring this event back.
Nice. And where can we find more about this?
Yeah, you can go to MidwestREsummits.com and check out all the speakers, check out a little bit more about kind of what you can expect, and recap some previous events. But yeah, just go to MidwestREsummits.com.
All right. And we'll put a link to that in the show notes for anybody who's interested in investing in the Midwest. And that sounds like the target, people who are investing in the Midwest, right?
Yeah, you don't have to live in the Midwest necessarily. So we get a lot of out of market investors who maybe, are familiar with the Midwest, maybe you're going to meet some operators or get just a general sense of like, hey, what's the sentiment right now? Yeah. And I think that's key, man. If you're going to invest, you kind of always want to have your thumb on the pulse of what's going on, what's the sentiment. And it's very interesting for me because I remember they're like days, almost like
Mhm.
specific days where that sentiment starts to change. There
Mhm.
was a report that was released not that long ago that rent increases finally went down, right? We had been
Mhm.
seeing for years, rents going up, rents going up, rents going up. And there's a report that there was finally a pullback. And I
Yeah.
think people took that report and like, okay, this is it. Like, okay,
Mhm.
the honeymoon's over.
It's
And it's like
over.
that
Yeah,
sentiment
exactly.
shifted that day. You're looking
Mhm.
at people's posts and just, you talk to brokers and like you can start to
Yeah.
get a feel for it. So I think the more you can be connected to other people who are in this space and doing it daily, the
Mhm.
more you can get that real time feedback,
Yeah.
because a lot of the reports and data, they got to look backwards.
They lag.
And by the
Yeah.
time they catch up, it's too late. If you're looking to put an offer, this week on a deal, well, you need to know what's going on this week, not,
Mhm.
what things sold for 3 months ago.
Yeah.
So I think you just have to have your finger on the pulse, and networking is one of the best ways to do that.
Cool. Cool. Awesome. Appreciate it. And anybody interested in that, we'll have a link to the show notes. Once again, it's the Midwest Midwest RE Summit, right?
Yep,
.com.
that's it.
Okay.
MidwestRESummit.com.
Awesome. All right. Well, we're going to shift gears, and Joel, welcome. How's it going?
I'm doing good. Thanks for having me on here.
Awesome. Well, your turn. So tell us a little bit about yourself.
Yeah, so I've got a long background of
Mhm.
being in business.
Mhm.
The last 5 years, I've been a GC working in construction. Last
Mhm.
year, we recently got into multifamily, getting in there and getting those rehabs done.
Mhm.
Before that, I was in truck driving. And like
Mhm.
John said, I was just missing a lot of the family stuff and really was looking at my life and really wanted to be around my family more. Before
Yeah.
that, I was in HVAC.
Mhm.
Uh, and then before that, I used to be a DJ and go do
Yeah.
weddings and parties and dances.
I mean, until you said DJ, I was thinking, man, that all directly applies to multifamily, and then DJ.
Yeah.
I guess
Yeah,
your
I
your
know.
your tenant appreciation days, you can really rock out for those. But
Yeah.
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 So well, cool. So what's got you into multifamily on the active side?
Yeah, so once we got into that apartment
Mhm.
complex and just started tearing stuff out and seeing how these owners would come in here
Mhm.
and roll up in their nice vehicles and, show up at 9 o'clock. And, like John said, we're not getting up at 5 o'clock in the morning to be at the job site by 6. And I just really took a step back and was like, hey, man, I need to change something. I really need to uh, look at people around me and see who has what I want and then go after that. And
Mhm.
those people that were in my life hiring us for those jobs, they just
Mhm.
had a nice lifestyle that I really wanted. And I
Yeah.
was like, man, I really need to get into this space.
Yeah. And it's something that it's nice being on the end I'm at, where, you look for general contractors and, you write the check, I think I'm on the right side, to be honest with you. And I think you're seeing the same thing as like,
Oh yeah,
yeah,
absolutely.
you're doing a lot of work and you're making guys like John and I, quite a bit of money on the backside.
Yeah, definitely trading
So
time for that dollar
yeah.
it's not the way to go. I definitely need to make time work for me.
Yeah, absolutely. Cool, man. So, I mean, moving into the commercial space, I think is something that, well, obviously that's why you're on the podcast. But if you go a little deeper, let's dive deeper on your motivations and your reasoning. What's your big burning why?
My big why is my family. Both my wife and I come from very low income families, and
Mhm.
not to say that we weren't broke. We did
Mhm.
have money, but we never like got out of the rut, right?
Mhm.
And so I really want to change my family tree. I just want to
Yeah.
be able to buy that boat for my dad and live in a nice house with my wife and my kids and be
Yeah.
able to go to all the games and not miss practices and maybe coach more games
Yeah.
than what I can do. I just want to be more there for my kids and
Mhm.
have stuff that I didn't have. And
Yeah.
I did have a lot of stuff when I
Mhm.
was, growing up with my parents, but I want to be able to stand on their shoulders and offer even more to my kids. And having a job just doesn't cut it.
Yeah. Yeah, much different, much different. And I mean, John talked about the mindset between employee and an entrepreneur, and how that changes. And I think that affects the family a lot too. If you're, um, if you're going to job and punching a clock every day, a lot of times that becomes consuming. That's what I found anyway. But
Oh yeah,
yeah.
absolutely.
Well, cool. Well, hey Joel, we got John on the line. What do you want to ask him?
Hey John, I really want to ask you how you find the off-market deals.
Yeah, man, great question. I want to answer that, but first I want to just comment on what you talked about with your why, because I smiled as you were talking about your whys to be a present father and coach your kids. And for those of you who are watching on video,
Yes.
you might see some pictures of like one of my boys and his team, and I've got another picture over here. And,
Right.
and basically, I've become
My background as well. Yes.
Yeah, I've become the de facto coach for pretty much most of the kids' sports at this point. And it's funny because at that time, that's exactly how I define success. And I think it's really important for you to define success in your own terms. And when I was in corporate America and I watched my colleagues who traveled all over the country and did cool things and made a lot of money, but they didn't control their time and they missed all those kid activities. And I thought back to when I was a kid and my dad worked third shift and missed a lot of my activities. And I didn't think it impacted me as a kid, but as an adult, I thought about it more, and I do think it, impacted me to an extent. And defining success that way, I think, gives you clarity of what you do want to do and what you don't want to do, and that's really important. So I just wanted to, as you said it, and I'm a little bit ahead of where you want to be, and it was really humbling for me to recognize that some of these big goals that we had, maybe 5, 6, 7 years ago, it's like, wow, we've accomplished a lot of that. That's pretty cool. Yeah. But your question was how to find off-market deals, and it's a great question, right? There really isn't just one way, right? It's like ask how you find any good deal. What I would say is this is a relationship business. And I presume when you say that question, you're talking about commercial off-market deals and not just a house that no one knows about, right? There are a couple things, man. A lot of single family investors will want to use some of those tactics and maybe do direct mail or maybe do kind of a direct to owner campaign. Yep. And certainly those things can be helpful and successful. I would say it depends on the size of the deal, the sophistication of the investor, and the class of asset. If you are trying to find an off-market 200-unit A-class apartment community, it ain't happening. Yeah. It ain't happening. Okay. The person who owns or the group that owns a property like that, they're not going to sell to somebody who sent them a mailer. Right? Like you're sophisticated and savvy enough to know that if you can own a 200-unit A-class apartment building, you're not going to sell to some postcard. Okay. You're going to list it with the broker. You're going to sell it to someone you have a deep relationship with that you trust and can close on that transaction. Now, if you're talking about a 10-unit in a C- area, yeah, you might catch the guy at the right day where he just had 2 people move out or he's got a couple of evictions and he's like, you know what? This thing isn't worth the headache that it is. And maybe you could come in with a fresh business plan and this person's self-managing it for the last 10, 15 years and it's just burned out. Maybe some of these laws that have changed due to COVID over the last few years have just started beating them down because they can't manage the property the way they used to or the way they want to. Maybe you can't send them a flyer and maybe on that day they're like, you know what? Maybe I should sell this thing. So I think you can go direct mail on something that's a little bit smaller. So I think it kind of depends on the asset, but the biggest thing is relationships. You want to make relationships with industry professionals. Brokers are going to be your best lead, but outside of brokers, property managers, I'll tell you, we've got a property management company on one of our larger assets, and I had a conversation with one of the regional leads. And I just told her directly, I said, listen, we're looking to grow, we're looking to scale. If you come across any deals, if any of your other owners are interested in selling, please let me know. We'd consider making a fair market offer for that asset. And she actually reached out to me last week saying, hey, they're going to list it with a broker, but I wanted to make sure you're aware, here's an asset. We manage it. I can tell you that we like this asset. I think it'd be great to continue to hold. I can't share too many details because we do manage it, but I will tell you that I think it's a good asset that you should look into. So having those industry relationships is key. Brokers, property managers, any other professional who's close to the property or may understand what's really happening at that property is a great person to have a contact with.
Yeah. I'll add
Nice.
to that. I was sitting at dinner with several guys that were head and shoulders above me, in multifamily. Most people around the table had at least 1,000 units in their portfolio. Some of them had 5, 6, 7,000. And I was just happy to be at that dinner. But at one point, one of the guys said, I haven't bought a marketed deal in 7 years. I'm just like, oh my goodness, holy cow. And I started listening to him. And one thing that I realized is he had very clearly defined his niche. He had a city, and I mean a city that he was working in, and he had a very particular type of asset that he went after. And because of his level of focus, when brokers found a property that fit his criteria, they would go straight to him every time because they knew that he would buy it and they knew that he would close. So there's lots of different ways to get these off market deals, but that's kind of one of the light bulb moments I had once upon a time is, if I can be that guy that has that incredible focus in a large enough market where I can create my own little corner, then every broker is going to bring that exact deal to me first. Anyway, that's just one lesson learned I had. I'm still working on it. So ask me how it goes in a year.
I will. Second question I have is when you do get this relationship, what is, quote unquote, your elevator pitch? What do you ask and talk about and how to build that relationship with the broker?
Got it. My kids just got home too. So I don't know if you can hear them in the background or not, but yeah.
No, mine's came in with a lot of noise and stuff, but they were okay. I don't think it picked up. But my other one came in. I had a note written, so I handed it to him, so he was good.
There you go.
He didn't close my door back though. So I'm like,
all right, that's our why, right? All right. That's our why.
All right, that's our why. That's our why.
That's our why. Yeah, that's a great question, right? And I'll play that back to say, how do you build credibility with that broker, right? So how do you get, how do you pitch this broker? How do you build credibility so that they can deliver those pocket listings or those best deals to you? And the reality is this: you have to understand this is a business, and brokers will tell you all the things that you want to hear, but they get paid when you close on a deal. So they are looking for the people who can close. And you heard what Brian just said, right? If you can be that person in the market where they're going to come to you because they know you're going to close on this property and put money in their pocket. So the first thing I would say is be really clear on what your buy box is. If you are clear on what you do want, then you can be honest and say, hey, you know what? No, I'd have questions. Maybe I'm interested in this deal, but I'd have a lot of questions. But if it fits this, or if it checks these boxes, then absolutely we'd be interested in buying it, right? The clearer you are on that, then the broker knows what kind of deals to bring to you. And if you perform and deliver on that, then they're going to know, okay, hey, this person, they like this. They bought that property with me. I'm going to keep bringing them those kind of deals.
Yeah, the thing that I'll add, and John hinted to it, just didn't come out and outright say it, they're looking for people who can close. So before you talk with a broker, I think it's a good idea to sit down and really understand what it takes to close, and be able to articulate that to the brokers, So, John and I, we've both done over $100 million in transactions. My first conversation with the broker, I'm going to tell them what I've done. All right. Because that's credibility right there. Like, hey, Mr. Broker. And by the way, I had this conversation with 2 brokers last week. Here's what I've done. Here's how many millions of dollars I've raised. Here's how many units I've closed. Here's how many I've come full cycle. Okay. That's credibility. He immediately knows that if he sends me a deal that's in my buy box, I'll be able to close it. Now, flip that around. You're brand new. Okay. You need to know what it takes to close and have answers, like legitimate answers for all those questions. They may ask you about a key principal, loan guarantor, where the equity is coming from, where the debt's coming from. You've got to understand all of that. And you've got to be able to have your ducks lined up before that broker conversation if you want them to take you seriously.
Brian, you did a masterful job of answering that. And Joel, and for everyone listening, I want to just underscore a point there. When we talk about credibility and proving that you can close, your experience is your experience, right? Like before you did $100 million in transactions, you had zero. That doesn't mean that you go in there and you say, well, I've never done a deal, but I'm hoping you give me a chance, right? You can still demonstrate your credibility because if you've listened to podcasts like this, if you've connected with other people, in your case, Joel, you're a general contractor on some deals, so you can highlight the deals that you've been a general contractor on. If you have a sense of the number of units or anything like that to frame it up, that's what I would do. But essentially, you want to put together the best credibility package you can for yourself, whatever professional experience you have, whatever, real estate experience you have. And then you want to supplement that with other folks. Who else is on your team? Mentors, partners, key principals, other partnerships, property managers, other contractors. I want to show them that I'm ready. That's the point. The bottom line takeaway is this guy, this gal is serious. And if I bring them the deal in this box, they seem to be able to close this deal. You want to make sure you can do that. And not just for the broker, not just to check the box and make them feel good, for your own confidence. Ask yourself, if the broker did give you the deal, what might stop you from being able to close on it? Is it raising the money? Is it signing on the loan or getting approved for a loan? Is if you close on it, what might stop you from being successful? Is it not having the right contract or not having the right property manager? So you want to do a lot of this legwork to build your own confidence and the credibility so that you can go out there with confidence that, yes, we can take down a deal in this size or a deal that fits this buy box. So I think it's really important to get clarity on that. So when you do get in front of that broker, you can speak with confidence and you can speak with the credibility that you are ready to take that deal down.
Love it.
Nice.
Love it.
That's awesome.
Very actionable too. So, all right, we got time for one more question and answer. So, Joel, if you got a silver bullet left that you haven't fired, now's the time to pull that trigger.
Gosh. Sure. I got one more. In your area, you were talking about the Midwest. How do you narrow down specifically what you're looking for in a market? I know you do market research and that, but what are some of the criterias that go, ooh, that may be a good market?
That is a great question. There are a number of factors we look at, and we've gotten to the point now where we kind of just look at updated information and kind of confirm things. But I'll tell you this, right? Most people are going to tell you, look at population, job growth, look at industry diversification, look at the ease of doing business, things like that. And those are very critical things, okay? Very, very important. You want to be in markets that are growing. You want to be in areas where demand for multifamily or whatever your business is, where that demand is growing and likely to continue to grow, okay? With that said, I will tell you, there's one thing that if I were in your shoes and I was talking to me, 5 or 6 years ago, 6 or 7 years ago, I wish I would have known. And it is looking at the transaction volume, because you can have a market that fits all of those boxes and criteria. But if the kind of property you're looking for only gets traded once a year, it's not going to help you very much. And I spent a lot of time looking in markets for what effectively became a unicorn, because in the Midwest, you got to understand some of these markets are older housing stocks, right? The Midwest is older than, say, Phoenix or Texas or some of these markets. So there was not the development boom of apartment buildings that you saw in the 70s or 80s. So if you're looking for a 1980, 1990s, 100, 200 unit apartment community, well, one, they're probably going to be out in the suburbs, right? Not necessarily in the proper of the city. But then two, in some of these markets, they're not openly traded as they are in, say, Texas. So they may be traded amongst a small group of people who already know each other, and it's more of a backroom kind of deal. I got this property, I'm looking to sell it because I got to go buy this plane or whatever it is, right? They just shake hands and the deal's done. It's never even listed with a broker. So you may need to understand some of those kind of things, just to understand how many deals actually get traded on the open market, each year, what's the transaction volume, so you can understand, hey, will I even have the ability to find a deal in this market? So that's a question I would ask that, again, 6, 7 years ago, I wish I would have known to look for that.
That's a good point. That's a good point. I would say there's a podcast out there that used to be called Target Market Insights that had a lot of that started out talking about exactly that question, and that's John's podcast, by the way. But and right now it's multifamily insights is what you call it, right?
Multifamily insights, yeah. And that's exactly it. And Joel, we literally started with how to find the best places to invest, because the challenge I was facing then was I was in Chicago, and when you're buying your own properties, the numbers don't have to be as strong, right? If it's just for you, if I was getting 8% return, I was happy, right? So that's really the only thing I look for is, hey, can I make 8% on this deal? Great. When you are giving away half, if not more than half of the equity to other investors, well, do you want to do this deal to make 4% return? Probably not, right? So now you're starting to say, okay, I need a different deal structure. I need a little bit more meat on the bones for these deals, and I had a hard time finding it there. But then when I would talk to my friends who were investing, all of them were investing in Texas, and I couldn't underwrite deals in Cincinnati, Ohio, or even Chicago for that matter, the way they were underwriting in Texas. So I had to figure out, like, okay, I don't know what I should pay attention to and what I shouldn't pay attention to, right? And that's why I launched that show, Target Market Insights, which is now Multifamily Insights, tell people find the best places to invest. So if that's something you're curious about, you can go back and listen to some of those early episodes. We cover people from all over the country and literally drill down to like the sub-market level. Like, okay, great, you're in San Antonio. Great. What part of San Antonio and why that part of San Antonio? And if I'm not in San Antonio, for me, my job as a host was, how do I take what this person is doing in San Antonio and apply it to Cincinnati? And literally it helped me because people would say, okay, hey, you want to look at, this interstate, right? This interstate divides kind of West San Antonio versus East San Antonio. Okay, now I'm thinking in most markets, interstates, rivers, those kind of natural landmarks, right? They separate parts of the city. In Chicago, it was the major streets, right? You want to be east of Damon or east of Western or north of this street, right? So it's if you can understand where those boundaries are, well, now when you're doing kind of your rent comps and you're really digging into the markets, you're thinking like a renter would think, because they're going to have those boundaries. Okay, well, hey, I don't want to look west of this street because it starts to get a little dicey after that, right? So now when I'm looking at properties or I'm looking at rent comps, I know that because again, if you're just going off of a circle, a 1 mile radius or a 3 mile radius, you may not know that. Well, this is in a whole different school district or a more desirable part of the town. And, you kind of have to be able to get that level of information and knowledge. And it starts high level, but then you start to bring it down to the sub-market, almost street by street level.
Awesome. And that was the perfect question for John, by the way. And as soon as you asked it, I was smiling, but we are out of time. So one last question for each of you. John, you get to go first. How can listeners learn more about you?
The easiest thing is to go to our website, casmoncapital.com. You can get it on our podcast there. We've got a sample deal package available there. And then any kind of events or upcoming webinars, workshops, things like that is all available on the website. Again, it's casmoncapital.com, and look to connect with you there.
All right. And Joel, same question for you. How can listeners learn more about you?
The best way is just get a hold of me through text, call, or email. We're currently working on a website.
All right. Awesome. And we'll put your email address in the phone number, in the phone book. We'll put it in the phone book, guys.
Yes.
There we go.
Put your email address
pages or the yellow pages? Which one?
Yeah. We're going to go white pages, white pages right now. And as soon as you have that website up, it's going in the yellow pages. But just showing my age right there. But
we're just going to put it up in the cloud. That's all. Somewhere in the cloud.
We'll put it in the cloud. Yeah. I don't know what that means, but we'll put it there. All right. Well, cool.
Somewhere.
Thanks, guys. Appreciate your time, and I enjoyed it. It's a lot of fun.
Yeah. Thank you so much for having us.
Thanks for having me.
Hey, if you like that episode, make sure to subscribe. But more importantly, if you haven't joined our multifamily educational community yet, which we call the Tribe of Titans, you are missing out. Get 30 days free by clicking the link in the description to this episode, or go to thetribeoftitans.info, and we'll see you there.